After a wild week following the rate hike announcement last week, the market took an absolute 180 on Wednesday and absolutely broke out without regard for much of anything. Let's talk about what we should expect in the market this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. My name is Chris. I'm part of Riz International, and we are a group of traders who are looking to not only increase our skills in the market, but to really help make our money work for us instead of us working for it. And what have we been seeing in the market this week? It's been kind of confusing, to say the least, and it has been incredibly difficult trading in this environment because it feels like the market just can't pick a direction. We had multiple attempts at 4,000 last week and early this week, and we just could not break out of it. But then on Wednesday, the market did an absolute 180, huge gap up in the morning, right to that 4,000 level, and the market did not look back at all. Friday was a huge rally going into the close, with closing up almost 1.5% up on the day, 1.44 to be specific, and we really pushed over that 4,100 level. Now, I'm going to be honest with you, we're looking incredibly bullish right now, but there are a lot of factors that you need to be thinking about before you just say, let's throw all the risk on and go long on everything. Honestly, once we hit that 4,200 area, we're going to be looking at a market that is overbought at that point. We are approaching overbought now, but we are not quite there yet. But we've seen a lot of risk-on attitude lately, and it seems as though investors are starting to think that things are looking around. Once that happened, once we had this huge gap up on Wednesday, we start seeing FOMO and greed kicking in for the average traders like you and me. And that's why we see this continuation rally moving into Friday. Now, what's really going on here? Why is this market jumping up like this when we just hiked interest rates another 25 basis points? Well, what they're doing is people and the markets seem to feel that there will be rate cuts later this year and a quote-unquote soft landing. And there won't be any recession. Everything's going to be just fine. Everything's great. You know, the Fed's got everything under control. Yeah, I know if you sense that sarcasm and hesitation in my voice, you really should, because there are a lot of negative economic pressures looking at us right now. And the recent bank failures with Silicon Valley Bank could just be the beginning. If we see continued rate hikes this year, which the Fed has to do to curb inflation, then we may see more bank failures. And with more bank failures, there'll be less confidence in the market, and we'll see the market correct. If there is no soft landing and there are no rate cuts later this year, then the market will price that in at that point, which is why right now we are being incredibly cautious with our trades. We've had some long positions that we've been holding for some time. We're able to close those with profit. This week, they weren't huge profits, but honestly, when you get a run like this, you really have to take advantage of it. But we aren't running out to place a lot of long trades just yet because there are so many negative economic things staring us in the face. With all that money printing that we saw in 2020, all of the, the cows sometimes come home is basically what I'm trying to say. So sooner or later, all of that money printing is going to catch up with you, and we're seeing that in terms of inflation. Me personally, I don't think that this is the big breakout of the year. You know, this is not where the market turns, in my opinion. Did we break out of our downtrend? Absolutely. 100% we did. And, you know, at this point, I feel confident we can just take this thing off. Let's just take it off. But you know what? We're looking at this 4,200 area, and we've rejected off here before. We've had a huge run from 3,800 before, just about, about 2 months ago, right at the beginning of January. So 3 months ago, because math is hard to do on stream. But yeah, we had this nice big run right up to 42, and then we rejected and came right back down to 38 again, because sometimes we have these ups and downs. Even in this massive downtrend that we had from the start of 2022, you were in a massive run to find the bottom, and we had many times where we went down, we came back up, and we went down, we came back up before we started going lower, and then we kind of came back up, and then we pushed even lower. So, you know, these market ups and downs are normal. They do happen. And if you can time it right, you can capitalize. The problem is if you buy here at 4,300 and you're like, this is it. We're getting the bounce, and the bounce comes, and you think that we're going back to all-time highs, and you're just stuck holding here at 4,300. Well, you're still hurting pretty bad. So it's one of those things where, yes, you can capitalize on these ups and downs, but when the market is bouncing around like this, where it really has, if you kind of look at it, we've really been range bound between about 4,200 and 3,800 all year. And so kind of, let that sink in, because that's the range that we have to trade right now, and that's very difficult to do. And there's going to be a lot more buying, in my opinion. I think we're going to see more buying this week. We're going to see all this euphoria, like, everything's great. It's sunshine and roses and rainbows and unicorn farts and all that stuff. And then reality is going to sink in and be like, inflation is still really high, and these interest rates are still coming, which is pushing up borrowing costs, which means I can't go get that dream house, which is already overpriced in the market. So we're going to see some reality hit here eventually, in my opinion. And I know Riz kind of holds this as well, that yes, we will see these euphoria jumps here where we have these ideas that, it's going to be a soft landing. Everything's going to be great. But there's a lot of stuff going on in the world, guys. And there's a lot of consequences for everything that the Fed did during the big event of 2020 that I can't mention on the platform. Otherwise, the YouTube algorithm doesn't like us at that point. And by the way, if you are watching us on YouTube, make sure you slam that like and subscribe button. Do us a favor, join the channel, help us grow, and let us reach more people to help them grow as a trader as well. But one thing I want to touch on here that Riz was talking about, if you follow Riz on Instagram, which you should, make sure you click that link down in the description as well. He talked about, we have not seen, volatility and, non-directionlessness. That's a word that I just made up. Non-directionality since even 2008. There was even more directionality in 2008 than there is now, especially over these last 3 months, 3 full months of trading so far. And it's been very difficult. And so if you're learning to trade now, I know it may be really hard and you may be going through a lot of pain, but understand that there is a good aspect to this. If you can learn to trade this market, you can learn to trade any market. Markets with more direction than this are going to be incredibly easy for you to trade if you can learn how to trade this garbage. So if you are starting to learn how to trade, take that with a grain of salt. I understand it's a tough pill to swallow, but when we see, greener pastures or, redder streets, whichever way the market decides to go and give us a direction, you'll be thankful that you went through this time and you learned how to trade this type of market. Let's take a look here at the breakdown of the S&P 500 and see what's going on. Major run-ups here this week in both tech, communication, and consumer discretionary. So we see this risk-off behavior. Tech, of course, has always been considered a kind of a growth area. There's a lot of growth stocks in there, and we're seeing a major run-up here in tech. A good 6% jump this week since Tuesday. So once we started that run on Wednesday, tech has just been skyrocketing right along here with communications and, of course, discretionary, consumer discretionary. I guess if you are on a risk-off behavior, then, hey, we can throw some money at discretionary things that we don't necessarily need but that we want. We're totally all about that. All of these three sectors are outperforming the market by leaps and bounds. The S&P 500 currently up 6.5% on the year so far with this nice little rally on Wednesday. And we're starting to see the other sectors perk up as well. However, financials is still beat down. There is a lot of sentiment thinking that the banking crisis is over. I call BS. I'm throwing the BS flag right now on that play. I don't think we've seen the last of this. It may not happen for a couple months. If you look back to the Great Depression, and I'm not saying that that's what's going to happen, but if you look back then, when there were bank failures, it took sometimes several months before another bank went down. But then it starts to become, toxic. It starts to spread the more and more it happens. But, it starts with one. And then, they think we got everything fixed, and then another one happens. So if the Fed keeps raising rates, I'm going to go on record and say we will see more bank failures. If I'm wrong, you can post a comment at the end of the year, say, hey, Chris, you were totally wrong on that April 1st webinar. And I'll be like, yep, you are absolutely right. But if I'm not, well, you heard it here first. I don't think we're out of the woods just yet. I don't think it's the quote-unquote big one, but I think we have more bank failures in our future. Healthcare and utilities still also underperforming, but all of these are starting to curl up. It looks like here we got consumer staples and real estate starting to perk up over the zero line, which is a very nice sight to see. One of the few times they've done that this year so far, but energy stocks still suffering a bit as well, still below the zero mark and underperforming the S&P 500. Let's take a look at what's going on with energy and specifically oil. So, oil has been on this really kind of bear run since June of last year, and we're not seeing much relief from that now, are we? But we are starting to come into the spring months, so we are going to have to see with people getting out more, with, of course, the big 2020 issue saying, hey, it's over, we don't need to worry about that anymore, with restrictions being lifted. We'll see if oil starts to perk up here later this year and we get that summer push like we usually do, or if we get stuck back in this channel. Now, we had been in this channel between about 82 and 73 for several months. We kind of broke down below it, and now we're back up in it. So we've got a couple resistance areas here. Of course, that channel is one, and then the 76 area has been somewhat significant in the past. So we'll have to see if that continues to act as support and resistance or not. But just a little bit of perk up in oil this week. No trade right now, nothing that we're looking at. And with the whole bank thing, gold went absolutely nuts. And right now it's just kind of holding here right around this $2,000 per ounce, which is ridiculously expensive for gold, if you ask me. But yeah, we're seeing gold just kind of chop around here now that we've made it towards, we've had this huge push, this parabolic move, and now we start to consolidate. And typically what happens is when you get a big push like this and you see this sideways consolidation and it can hold, usually this area will become a support zone after that. So we're going to have to see if this 2000 area holds for gold. We've come and got really close to it. We're not quite there. We're really hanging out here right around 1968. But still really close to 2000, and we see that push over 2000. It could be very, very interesting. Let's take a look at the bond yields here. Of course, these are the Treasury bonds. Took a big hit with Silicon Valley, failing and all of that going on. And, really the 2-year has been kind of chopping around a bit, but still now the 2-year is still outperforming the 10 and the 30-year bond yields. So apparently it's a better investment to do short-term Treasury bonds as opposed to long-term Treasury bonds. Tell Silicon Valley that. They should have known. Yeah, the 2-year yield looking very nice now, still above the 4% area, while we've got the 30-year right here. Let's see, we're right at about 3.7, while the 10-year is sitting around 3.55%. So, a bit of a pullback in bond yields. We've seen a lot of up and down in the two, a lot more volatility in the 2-year bond yields, and a lot less in the 30 and the 10, which makes sense. The dollar here taking a bit of a slide, of course, right when the whole Silicon Valley thing is when we started seeing that decline, but we've seen more continuation in the dollar, looking towards the downside. Now, of course, we haven't seen the bottom of where we were at the beginning here on February, right around at 101. We're just sitting right around at 102 right now, kind of chopping in that area, but still a pretty solid downtrend on the dollar. We'll have to see if that continues. Let's go ahead and take a look at the important financial dates this week. And if you are here on the live webinar and you want to start typing in your questions, now is the time. Really not a lot of big numbers here except on Friday, and that is the unemployment rate. This one always seems to be a pretty major catalyst when it gets reported. I'm not saying we're going to see, a gap up like we did on Wednesday, but usually this will push the market one direction or another. Now, they're looking like they're forecasting about 0.1% lower than what we were before. Everybody's saying it's going to be the same. I will have to wait and see on Friday, but that is a potential catalyst to push the market, but really not too much else going on. We've got manufacturing PMI on Monday. Job openings on Tuesday. Wednesday looks like balance of trade and non-manufacturing PMI. Nothing on Thursday. And then Friday is the big day with unemployment. So that always usually, kind of moves the market a bit, especially in pre-market, since they're going to be reporting it at 7:30 in the morning. So if Riz is feeling frisky and up to it, we may see him do some stuff live with that. That's usually a catalyst he likes to trade, but we'll have to see. He also likes trading Powell speaking too, which is always fun. To watch him do that. But yeah, not a huge week for financial announcements other than on Friday. So keep your eyes peeled about 7:30 in the morning on Friday to see what those unemployment numbers are going to look like. And that really should be the big one for this week. But yeah, I'm just waiting here for a couple questions to come in. But the truth is, guys, it's a very difficult time right now. We've got a lot of forces working on the market, other than just your normal, earnings, normal, financial releases. We've got so much more going on. We have things happening in Europe, things happening in the South China Sea. We've got, all of these things going on with AI. Don't get me even started on that one. Skynet. Oh, sorry. I choked there a little bit. Sorry about that. But there's a lot of things going on right now that can move the market one way or another. There's lots of different pipelines that are being looked at, not positively by some folks. And so if we see things happen on the global stage, that will, of course, affect the market as well. Of course, there have been a lot of issues in the United States with infrastructure right now. Lots of train derailments being reported. Those, of course, are incredibly dangerous. So if you live near, tracks or an industrial park that has a lot of trains coming in and out, of course, keep your eyes open for that. But those things can affect the market as well. I heard there was some issues with some barges on the Ohio River. That's pretty close to me. Speaking of things close to me, we had a tornado run through last night. So that was pretty exciting. I say exciting with air quotes as best as you can see through the camera here. But yeah, we're fine. If you're wondering, everybody here is fine, though we did have some damage in our town. So it was definitely a touchdown. So that's a little scary. So there's just a lot going on right now, guys. And I think the important thing, of course, sometimes trading is very difficult, and the right play is not to play. Sometimes the right play is to wait for the right moment when you want to get in. You can play this rally. I'm not going to tell you can't, but if this thing rolls over on Tuesday, I'm going to also tell you that, maybe it wasn't the right time just yet, because the market really hasn't picked a direction. Honestly, I don't think we can say that we're out of this until we see a strong bullish push over 42 towards 43. That's what I'm going to say, because we've rejected off 42 just here recently, about a month ago, almost exactly a month ago on the 2nd of February. So, I think that it's very important to keep that in mind. There are a lot of forces pushing on the market in different directions right now. And so head on a swivel is all I'm going to say. Be very, very careful. If you do want to play into a rally like this, I always recommend going in small. If the rally continues, you can always add later and, average up to increase your position size before you just, say, okay, full on risk on, to heck with it. Let's go. This is it. So I'm not seeing any questions come in, so I want to thank everybody for coming out. I really appreciate all of you, all of our subscribers here on YouTube, and of course, all of our Riz Elite members, especially them, because they are what keeps the lights going on here at Riz Elite. This is why we're doing this. We're doing this for you guys because we want to help you become better traders. And sometimes to do that, you have to learn patience. And my personal favorite joke is, the prayer, God grant me patience and give it to me right now. So on that, I'll say have an absolutely wonderful weekend. I hope you all are having a great time. Enjoy your time that you have, and we'll see you in the market on Monday.